The Enterprise Investment Scheme is a tax-approved scheme or arrangement put together by the government. In essence, it's a way of incentivising individuals to invest in small and medium-sized companies. So he or she would invest cash into a company and in exchange get a shareholding, but also then access a number of quite important tax reliefs. Frankly, with the government closing down loopholes and clamping down on tax avoidance in recent years, this has stood the test of time. It's approved by the government, and it's something that people should really consider. Essentially, it's obviously an ability to raise cash. As we know, it can be difficult to borrow money from banks, and by incentivising through tax relief the investor to invest in a company, that enables the company to access the capital it needs to expand and grow. Other advantages would be, quite often the investors who make that investment into the company are entrepreneurs themselves, and is therefore able to not only part with the cash, so to speak, but also provide business acumen and expertise to the company. And I suppose the third advantage for companies would be that having invested in the EIS, there are a number of rules there to try and stop the investor from taking that capital back. There are three key benefits for the investor. The main benefit is an income tax reduction. For every pound invested into a company, the individual can have 30% income tax relief. Second benefit is a capital gains tax benefit, because having made that investment into the company, provided you own those shares for at least 3 years, then if you sell those shares at a profit, you pay no capital gains tax. The third benefit of the EIS for the investor is a capital gains tax deferral. So what that means is that if the individual has perhaps sold another asset, a second property or some stocks and shares, and is faced with a capital gain, normally you'd have to pay tax on that. But if you use that money, that gain, to invest under the EIS into another company, you can defer that original capital gains tax charge. Generally speaking, all companies can participate, other than certain businesses on a prescribed list. So for example, a company involved in developing land, investing in land, perhaps operating a hotel or a care home, accountancy firms, legal firms, businesses involved in leasing and finance, they're all considered by the government to be lower risk, and therefore they cannot access the Enterprise Investment Scheme. Once the investment is made into the company, and obviously that investment is in the form of cash in exchange for shares, then you can then apply to the Inland Revenue using a form called the EIS-1 form. Provided they're happy that you meet all the qualifying conditions, they will then provide the investor with a certificate called the EIS-3 certificate, and you then use that certificate to claim the tax reliefs via your personal tax return. Clearly, the obvious pitfall is if the company goes into liquidation or fails. The other risks are around timing, because you might be forced to sell, or you might be forced to hand your shares over within the 3-year window. So to keep your income tax benefit that you've had and to enjoy a capital gains tax-free sale at the end, you have to hold your shares for at least 3 years. Well, in certain situations, 3 years is a long time, and if you sell your shares within 3 years, then those tax benefits are clawed back. So generally lots of positives, but clearly there are some downsides and some risks with the Enterprise Investment Scheme.